So good morning, everybody, and welcome back to another episode of Good Morning FinTwit. It is a pleasure to have you all joining us. Like Evan said, we're actually a bunch of us in person right now, so it's a really unique experience. We're, I guess, legally not on the floor of the New York Stock Exchange, but we can see it, so it's a cool opportunity. And we're going to start off with breaking news stories like we always do from the weekend, and then kind of roll into several other areas. We're going to have stock picks. We're going to do a bit of a unique thing with the stock picks today, where we're actually going to poll everybody to hear a specific stock pick that the audience wants, and then we're actually going to place that trade live later today. Well, not live, and then we're going to screenshot it, put it out, and we're going to bunch of guests. But without further ado, let's get right into things. I'm turning it over to Evan for our breaking news from the weekend.
Awesome, Gav. Thank you for that. So I am actually on my phone right now. I don't have my computer, so there'll be a little bit of scrolling back and forth. So there might be that extra second before I can unpause. But I'm just going to get right over to the stories. First thing I got is Disney released the movie Free Guy this weekend, and based on the name, I know a lot of you might not know what it is, but if you've been watching TV, you've seen commercials for Ryan Reynolds doing a video game inspired type movie. Well, that's it. It looks pretty cool, but I have not gotten the chance to see that. So the reason that is in the news is Disney actually released that in theater only. So with the last big release that Disney did, Black Widow, in they put it half in theaters and half on Disney Plus. And there was big controversy around that, especially with Scarlett Johansson and everything like that. So it's really interesting to see Disney going back to the other model of it, where they are releasing it only in theaters. We'll see how this one goes. But the movie brought in an estimated 2.2 million in its Thursday night opening box office tickets, sales, or whatever. And it was projected to bring in 15 million to 18 million dollars at the box office this weekend compared to last week. I actually finally just got a DM from Risk vs. Reward here saying it was great. He saw it last night and he loved the movie. It looks really funny, but it's interesting. But this kind of whole vibe and how movies and everything like that is going to release going forward is, we're kind of at an inflection point right now where, AT&T owned Warner Brothers made a deal with AMC recently where they're going to wait 45 days before they release stuff onto, streaming services. So, there's kind of an inflection point with what is the industry going to do going forward. Next story I got here is actually a really interesting one that broke yesterday. It was Walmart possibly getting into crypto. So I'm going to scroll back around through this one a little bit, but they posted a job application on LinkedIn. It was just scrolling it to real quickly. I posted this last night, but it's from LinkedIn, and it was for a digital currency and cryptocurrency product lead. It's in Benton, AR. I believe AR is Arizona, but I am a stock market person and not a geography person, so that could be wrong. But yeah, so they're looking to hire a digital currency and crypto product lead. So it'll be very interesting to see if they do anything with that going forward. I know we saw Amazon recently kind of with similar type news looking to hire some people. So for all you crypto heads out there, I know you love this stuff. I know you love the underlying, advancements and a lot more people trying to accept it. So that's really fascinating. Next story I will move on to is U.S. has opened a formal investigation of Tesla Autopilot, and that's according to the Associated Press. So this was a story that broke this morning. It's basically saying that the U.S. is opening up formal investigations of Tesla Autopilot, citing collisions that happened with parked emergency cars. So emergency vehicles, ambulances, everything like that. And I know we've been seeing the Tesla, Autopilot and the Tesla Drive feature where, you can make your parked car pull out and come to you. So it's very interesting to see these type of, lawsuits happening around it. And I think it's kind of talks about the underlying stage we're at with autonomous cars and how we're still not there yet. There's, still some time and some, improvement that needs to happen before we can get to level 5. And these are kind of the hiccups in the pathway there. So we also got Nick on the call as well. Me and Gav are kind of away from our computers, so we're kind of using Nick as the Spider-Man guy in the back end, doing the chair, doing that stuff like that. So Nick, is there anything with Tesla that I missed?
And no, you actually didn't really miss anything from Tesla. And stock is down. But Philip O on CNBC this morning was explaining whenever they do the investigation, if they find something regarding the software, if it is the software, they're going to take it to the software manufacturer then they're going to look at it and they're going to recall it and maybe make some changes. But Reuters reported this morning, since January of 2018, it has identified 11 crashes with Tesla models, and it's scary. I personally don't have a Tesla. I don't know anybody that has a Tesla, but now this opens up to the other question with other cars that do that have some kind of software, if they're going to have some problems like this. But we're going to have to watch this closely. Stock is down in pre-market. We're going to see how that performs, but the major averages are on track right now, pre-market losses.
Awesome. Thank you for that, Nick. Thank you for that addition. Yeah, I've actually been seeing a lot more Teslas pop up near me, and I've like seen the increase in deliveries kind of firsthand with my area. So it's really fascinating to see. And I feel like, you know, cars crash all the time. It feels like it does become a little more news when a Tesla crashes, but that's just kind of where we're at in the stage. And when you're testing new innovative technology, the scrutiny you're going to be under is pretty high. So it definitely makes sense that when you're trying to introduce something new to the world like Autopilot, that, you know, you're going to be scrutinized to an additional level. And what I've realized is people are more okay with getting hit by someone else when there's someone at fault as opposed to a robot. That seems to be a big problem for people when there's no one to blame. But yeah, so I appreciate that. And I think we got one more quick story. You guys might hear some screaming and bell ringing and everything like that behind me going forward. You can guess where we are. We're not where we say we are. We're nowhere. But yeah, so if I get interrupted here, just let me know and whatever. But T-Mobile is investigating claims of a customer data breach. So yeah, so this came out yesterday, and there was a claim on an online forum. All right, guys, you guys are not gonna be able to hear us. We'll let the sound play around us a little bit, and we'll be back in another minute or two. This is part of the energy we got here, guys. We're super excited. Monday, stock market's back open. Let's go.
There's your opening bell.
Goosebumps, definitely goosebumps. All right, super awesome, super exciting. I'll continue it on with one last story, and then we'll kind of get back into it and move over with Gab to keep us moving. So the last story was, yeah, like I said, T-Mobile, they're investigating that online forum report that said data was breached from over 100 million accounts. This was according to the report in Vice Motherboard. The forum's post does not mention T-Mobile, but the hacker told Vice they have obtained data over 100 million people, and the data came from T-Mobile's server. So I think that with this type of news, hackings or anything like that, I love to just wait for the news to come out and kind of, you know, you don't want to trade it ahead because then you're going to end up getting weird stuff is going to happen. And, you know, what's supposed to happen tends to take that extra move. You know, Wall Street loves to say the first move after something happened is not the right move. And I feel like with this type of stuff, with this type of rumors and everything like that, you guys really have to let the information come out and then play from it. If you're playing on a playing field where you don't know what's true or not, over time, you're just going to lose. So I would say with any rumors or anything like that, unless it's from a really reputable source, which this one does not look like it is as much, I would say that you guys should kind of let it sit for a little bit and let all the information come out on this T-Mobile news. But with that, we're going to finish up the news stories. We may have one or two things back on the other end of this, but I'm going to pass it back to Gab. Actually, wait, before I do that, so make sure you're following everyone who we got up here. We got Peter, we got Tyler, we got Nick, we got Gavin. I know Katherine is in the crowd. She's at the top for me because I follow her, but make sure you follow her as well. Everyone we got up here, they're posting some really great content. And one last thing, we pinned a tweet at the top of this Spaces from Bullish Rippers. They are going to be sponsoring the trade we do. Gab mentioned it really quickly that we're going to be getting a poll out. But if you guys want to, look at them, they post some really great stuff. I actually tweet from the account. So there's that. So check out that account at the top, Bullish Rippers. It's pinned in the stream. One click will get you there. You can like the tweet. If you want to see how many times S&P 500 hit all-time highs over the last 30 years, go and check that out. But with that, now I'm actually done, and I'll pass it back to Gav.
Okay, hello everybody. And if anybody's unfamiliar, because this is the first time that I'm actually hosting a space from this account, my name is Golf Blacksburg, and I run the Wolf Financial account, in addition to being COO at Wolf Financial. And it's a pleasure having you all here with us. You just heard the bell. Congratulations to I think the company was Airspan that IPO'd, so pretty cool to be able to see that in person. All right, we're going into some trades for the week. Going to be going through a couple of different styled pieces with this. Going to give some price targets, some credit to certain accounts. Once I should mention, none of this is financial advice. These are all things that I went around on Twitter and I scoured and I found different pieces of information that made sense to me. I recommend that if anything interests you, you go ahead and do your diligence and make something make sense to you. Okay. With that being said, I'm going to go into a few of these. The first are going to be actually 5 price targets that we're looking at, and these are setups based on technical analysis. And then we're going to go into some option plays. These first 5 are going to come from Jake Wojcicki from TrendSpider. And so we're looking at first, it's going to be HIMS. This is HIMS. And normally I'm on my computer. It's very easy for me to be pulling up tickers and prices and everything like that. I am currently doing my best to do that from 2 phones, so bear with me. But for HIMS, we're looking at a price target of $9.50. Just based on what I'm seeing in the market right now, we're down overall. Looks like there was some stuff to do with tapering news. There's also obviously everything going on in Kabul and Afghanistan. So we'll just make the best of it. So HIMS, target price of $9.50. Next, we have CRM. That is going to be Salesforce. Salesforce looking at a price target of $2.60. Next, we're going to have Disney. This is DIS, price target of $190. We just talked about some news with Disney that could potentially, be bullish in that area. So continuing to watch it. And then we have Penn. So that's Penn National Gaming. Target of 75. They peaked, I think, near 120 when they had their peak, and they've been slowly coming back. There's been a lot of bullishness overall on sports betting over the last couple of weeks as we've seen some of the, like GNOG and other acquisitions this past couple of weeks. So there could be a inflection of that into this week. And then the last one we're giving a price target on is going to be PLTR. That's a big fan favorite. We saw it break through that $25 resistance mark last week on that big 14% up day, and looking for another gap up towards the area of $27.50. Okay, moving into a couple of plays, and we're going to use about 3 or 4 of these plays, and we're going to put them in a poll, like Evan said, and then we're going to actually trade that in a bit. We're going to probably give a good amount of the day for people to fill out that poll. So let's take a look at Roblox. So this first one is on Roblox, and I'm just looking from the last hour of Friday. If you look at the option call flow, there were some pretty heavy bulls going into that. So the put call ratio was looking at 0.619% of call premiums, and that was at around 9.9 million. This information is coming from Unusual Whales, who basically tracks unusual options activity. So you can see when somebody comes in and they make a rather large trade. So looking for Roblox, I believe the trade is going to be a 8/20 expiry. So that is a weekly $95 strike. I'm definitely considering putting that as one of our ones that we would be looking at for this week to be potentially trading. And then I'm going to go into some from Shark of Traders. So big credit to Shark of Traders. If you haven't checked out the account, they've grown by about 10,000 followers in the last month for really good reason. He puts out something called the Shark Trinity strategy. I don't know if he posted it to his personal timeline because he's been doing more proprietary stuff with it, but he was kind enough to share it with me so that I could share some with y'all. So the first one that we're going to have on here is going to be Uber. So last week we actually took a put on Uber as one of our moves. This week we're looking at a call. So I wish my data was loading a little bit faster on this other phone, but right now I'm looking for Uber at a $50 call with a 9/24 strike. So this is actually going out a bit, basically a month. And then after that, we're looking at the resistance and support. So this is really important. I just want to mention, when we're looking at these options activity trades, it's not a, we see it, we take it. It's we look for resistance and support areas for it to break through those, and sometimes for it to significantly break through them, not just by a few cents, but by actually, 50, 60 cents, whatever it is. So we're looking for Uber with resistance at $44.22, support at $41.28. Again, normally I do go ahead and actually talk about where the stock is trading at. Right now, that information is not super listed to me. I'm just watching tickers run across screens here. So we'll see what I see. And then the next one is actually, speaking of seeing, is going to be SE. Another one that I'm looking at heavily. These are just going to be obviously very pricey because of where the prices of SE, but there's been a massive bullish streak. I think it was like 28% over the last month of growth for this stock. So looking at a 9/17, $340 call. I'm personally very bullish on SE. I own the stock. I have not traded options on it just because they're extremely pricey. But if you have that kind of money, this could be something to look into. Resistance for SE is currently at $315. Support's at $297. So not a massive range, but you'd be looking for it to break out of that range to understand a little bit of directional activity. Then we're going into just two more on the bullish side. We're going to go into Docusign. This was a big winner last year during the pandemic. I believe it came out of earnings more recently. I think Richard Moglen might have talked about it last week. And so Docusign, we're looking at a 9/3/21, $335 call. Resistance currently sitting at $303.15. Support at $290.41. So again, a decent sized range there. So looking to just see a break out of those. And then the last bullish option for today is going to be DraftKings. It's going to be an 8/27, $58 call. And that is going to have resistance at 55.28 and support at 51.30. So those four again were Uber, SE, DocuSign, DraftKings, and we also talked about Roblox and then some other price targets. We'll be picking from these and put four out on the poll. And then just real quick, for those who are maybe a little bit more bearish, I do have a couple puts that I'm going to give you before Jonah Lupton is on here. And so those puts are going to be first GM. So looking at GM, looking at a $49 put on GM for 9/24/21. Current resistance is at $55.43. Support is at $52.72. And then the second one I'm going to give is going to be Plug. So Plug Power, this one was a fan favorite for a while, had a nice run up, but unfortunately has come back to earth quite so. And I do think it could fall again. So looking at a $20 put here for 9/24/21 with a resistance of 26.93 and a support of 24.75. Again, I think if Shark has already put these out, you can go and check on his page, or I'll put them out so you have the opportunity to be able to look through these trades a little bit closer. We're going to put some out on a poll, which thanks to Bullish Studio, Bullish Rippers for allowing us to be able to actually place that trade by sponsoring that. And we are going to come back to these trades kind of at the end of the week on Friday, where we usually recap, okay, we said these trades, we looked at these setups, how did they actually go ahead and do? And I think that covers just about everything there. If you have questions, feel free to DM, and I'll do my best to answer what I can. With that being said, I just invited up Jonah. So let's see if we can get Jonah up here to speak. And then once Jonah's up here, we're going to roll in. I asked Jonah to speak about some, earnings, some different stock plays. Oh, I will say that we traded much more around earnings last week than this week. There was just a lot less earnings, but we'll obviously it's Jonah, so whatever we get will be good. All right, Jonah, how's it going?
Good, man. How are you?
Living the dream, having a view that I haven't seen before. I just got photobombed by Jim Cramer.
Tell Cramer I said hi, and tell Cramer to chill out.
Okay. Yeah, I'm watching him right now. I see the back of his head.
It's an interesting morning. I mean, a lot of red on the screen, although a couple stocks are bouncing into the green now. Upstart's actually looking pretty good right now. I didn't know if it was going to hold that 200 level, but now we're looking at 209. So I feel a little bit better right now than I did 40 minutes ago, or not even 10 minutes ago.
Well, I'm glad to hear that.
Cool. But I mean, for me personally, last week was my big week. I think last week about 80 to 85% of my portfolio reported earnings. Most of the companies that actually reported numbers that were better than expected, or at least in line. But I think, as most people are realizing, if you're not beating estimates right now and raising guidance, the stock is going to get pummeled. And if you come in just in line with estimates or even your own prior guidance, you're probably still going to get pummeled. I mean, look at, SoFi, for instance. It's sort of a kind of a one-off example because their quarter looked, or their Q3 guidance looked a little bit light because of this CARES Act and the student loan repayment moratorium, which is now pushed back from September until January. So they're going to take a $40 to $50 million revenue hit because if you don't have to make payments on your student loans, why are you going to refinance them? I mean, obviously you wouldn't. So that business is going to be on hold until 2022, but I expect it to come back probably even stronger than ever. So that revenue they lose this year, they'll probably make up next year. And the rest of their business is actually doing better than expected. So they didn't have to change their full year guidance. So even though they're going to lose $40 to $50 million from that moratorium, they're making it up in the rest of their business segments, like financial products and financial technology. So I think we'll get a rebound in SoFi pretty soon. Now that we have a 1 quarter behind us in terms of being a public company, I would expect some of the analysts to come in and start picking up coverage. I think there's only 2 firms right now that have coverage on SoFi. I think the price targets are like 24 and 30. I can't remember exactly. I forget where I posted it over the weekend, but I would expect more to come in. I would expect we're going to see more upgrades on Upstart. I mean, there's only, I think, 6 or 7 firms that have coverage right now on Upstart, and a couple of them haven't updated their price targets in over 3 months. So we're probably going to see more firms come in and pick up coverage of Upstart now that it's a $15 billion company. And we're probably going to see some new price targets in the 230s, 240s, 250s. So, I mean, those are 2 stocks I'm watching closely right now. Celsius, of course, is my second largest holding. They reported great numbers last week. They beat estimates by about 22%. I think some people were looking for 30%, but I think it's pretty clear that they're having a supply chain problem right now because demand is just so strong. It's hard for a company to keep up with 200% year over year growth, but that's what they're seeing in the US. And in the next couple of days, we're going to get the last 2 weeks of Nielsen data. So for the first 2 weeks of Q3, Nielsen data showed 195% year over year growth. But then in late July, the company started doing all of these big influencer marketing campaigns on YouTube and Instagram. And we're going to get those numbers for the second 2 weeks of July in the next couple of days. And I would expect them to be well over 200% year over year. Because I think when you have all of these massive celebrities with millions and millions of followers all posting about Celsius, there's just no way that's not going to translate into a pickup in sales, whether it's on Amazon or in retail. So any sell-off right now in Upstart under 200 is a buy. I think under 70 on Celsius is a buy. Anything under 15 for SoFi is a buy. So that's where I'm still adding to these positions. And then you start to get into like my other favorite names, DermTech, ClearPoint, Desktop Metal. I posted in my StockTwits room today. I mean, clearly these companies are not getting any benefit of the doubt. Investors are basically, from the crappy price action we're seeing in some of these high growth, more speculative, still losing money, going to be monsters in the next 3 to 5 years, but they're not there yet. The bad price action is really just the market saying, you know what, for now, we're going to focus on these slower growth, but profitable companies. And when your high growth, potentially disruptive companies actually prove to us that they can do what they say they're going to do, then we're happy to chase them higher. So, I think we have to respect it. I mean, you can't fight the market. So I'm lightening up on some of those higher growth names and adding in some of these slower growth, but, more profitable companies. I haven't bought any yet, but I'm looking at a few. Love is one. Zoom Info reported great numbers last week. ZipRecruiter is another one that I'm looking at. And then a couple of cybersecurity stocks and even some semiconductor stocks. So on the cybersecurity side, I'm looking at a company, TLS, and then some of these like high growth software names that are still losing money, but really, really high gross margins, a lot of operational leverage in their business model, like an Asana or even like a Sentinel One. Recent IPOs where they look expensive, but right now the market doesn't care. The market's willing to pay for that growth.
That's awesome to hear, Jonah. Every single time you speak, it's so knowledgeable. So like, I'll just say it. Like, if anyone up here isn't following Jonah, which you all are, if you're on FinTwit, you're following Jonah. But yeah, I mean, that was just an example of why you need to. Quick thing that I've been noticing with this earnings season. It felt like you kind of touched on it. It felt like at the start, it was very much the theme of you're going to report good numbers and then your stock's going to head lower. And it feels like we kind of shifted the theme of the earnings season a little bit as we kind of got into the second half, where it's more of, if you report good numbers, your stock actually has a chance to go up and vice versa. Was that something you kind of noticed around this earnings season, Jonah? And like, yeah.
I mean, guidance has been a big part of it. It almost seems like the market, once you report Q2 earnings, the market doesn't care about Q2 earnings anymore. They're really just looking at Q3 and full year guidance. So if the company doesn't come through and raise Q3 or full year numbers, then that stock's probably going to sell off. I mean, we saw this. So STEM is one of my favorite stocks right now. Smart energy storage. I did a write up on the company recently. Hardware and software. 20-30% gross margins on hardware. 70 to 80% gross margins on software. They reported Q2 numbers in line with estimates and prior guidance. They left their guidance alone for a full year, and the stock sold off like 12%. So, I guess the market was looking for something a little bit, looking for a raise on guidance. But, when you compare that to how many SPACs have missed their guidance right out of the gate, like App Harvest, just a complete disaster, Mile, Catapult. I mean, these companies literally just completed their SPAC mergers in the last 2, 3, 4 months. And then they report their first or second quarterly report, and they're just bombing out and lowering guidance. So I thought some of the SPACs that actually came through and met guidance would actually get a little bit more respect, but it hasn't turned out that way. They're getting sold off as well. So, I mean, and then, like everyone loves to talk about how the major indexes are at all-time highs when you still have a lot of these small mid-cap companies that are pulling back to their 200-day moving averages. So, there's still some divergence in the market.
So I love that. Jonah, quick question, and this is for Upstart. I know that you had talked about how it pulled back that position, kind of holding the 200 line. Where is the point where you would start taking profit in the stock?
No time soon. I mean, this company right out of the gate, they came into this year out of their IPO in December with, I think, guidance this year coming out of the IPO was around 350 million. And then obviously when they reported their Q4 earnings, they raised that to 500. Q1 earnings, they raised it to 600. Q2 earnings, they raised it to 750. And they've already added 15 bank partners through the first 2 quarters of the year, because they came into the year out of the IPO with 10 bank partners. Now they're at 25. If you double that and think they can add another 15 bank partners in the second half of the year, which is probably conservative, that gets us to 40 bank partners going into next year with personal loans and then auto loans. And, there is definitely some thought that home loans could be coming in 2022. They're already looking at international expansion. I mean, there's just, there's more and more optionality in this business. They're de-risking it by, reducing their customer concentration. Yes, they still rely on Credit Karma a lot, but, at the end of the day, SoFi is really powering all of these bank partners and giving them access to this powerful, AI lending software, and Upstart themselves are not taking any credit risk. So, and then they have 150 institutional partners that are buying these loans off of their bank partners. So even the bank partners are not really taking that much risk, so they can continue to leverage up their balance sheet. So it really is a perfect business model with a tremendous flywheel. I think, at this point, we've already seen the company under promise and over deliver several times already. I think we have to assume that's probably going to keep happening. So if they're saying 750 million for this year and we're halfway through the year, I think there's good reason to believe that we're going to see something more than 750. So whether that's 800, 850, 900, I'm not sure. I've tweaked my models to assume they do at least 850 this year. And then I think going into next year with at least 40 bank partners, assuming we get there, and then auto lending is picking up traction. I think we could see 1.6, 1.7, 1.8 billion next year, and contribution margins are in the 50s. Conversion rates are in the 20s. So, I mean, there's no reason to believe they can't just keep pouring money into marketing. So I think this stock is probably going to at least 350 by the end of next year, possibly 400 or even 450. So I'm willing to accept some short-term volatility. Maybe they do a stock offering. I have no idea. They have 500 million on the balance sheet right now. They're cash flow positive, so they really don't need to do a stock offering. I know that rumor is out there, but I mean, whether they did it or not, I don't really care, because this is just not a position that I'm planning to trim anytime soon. I mean, it's been my highest conviction stock for the last 6 months. It's my biggest position by a pretty significant amount. If I had 5 other ideas or 5 other stocks that I loved as much as Upstart, then yeah, I might trim Upstart at like 250 to start to feed those other ideas. But I'm having a hard time finding other stocks that I like as much as this one.
Well said. Okay, so we have a lot to cover because we have a couple more guests coming on and we want to do earnings first. But Jonah, thank you so much for coming on. And before you go, I know we're doing another space on this on Wednesday, but you just want to give a minute or two to the audience about FinTwit Conference 2021 and why they should be coming?
Yep. So, just to make this quick, go to the website is fintwit2021.com. All the information is there. The speakers, the sponsors, the links to purchase your tickets, the links to reserve your hotel rooms. So Columbus Day weekend in October, which is October 8th through 10th, we're doing it at the JW Marriott in Orlando, Florida. I'm assuming we're going to have at least 300 people there, maybe more. And it should be a really fun weekend. There's obviously some content involved with speakers and roundtables, but we're also going to do cocktail party, like a VIP night at the nightclub. We're going to do a pool party. We're going to do an NFL watch party on Sunday. So there's going to be a lot of fun stuff going along, and it's a chance for a lot of us that have been become friends on Twitter over the last couple of years to actually meet each other in person and actually have some fun conversations, some laughs, some drinks. So if you're available that weekend and you want to come down to Orlando and hang out with 200, 300, 400 of us and talk stocks and have a good time, then go to that website, fintwit2021.com, and start booking your rooms.
Absolutely. Love it. Awesome. We're going to move into earnings. Jonah, thank you so much for coming on. Everybody, make sure calling Jonah. Jonah, if you have time to stick around, we'll have some more conversation in a bit, but no worries if not.
Okay. Yeah, I got to jump off. I got a 10 o'clock call.
Absolutely. All right. Okay. Good luck.
Thanks,
Thank
guys.
You.
Bye-bye.
Okay. All right. We're going to move right into earnings done by Evan. And then after that, we're going to hop to Katherine and Peter. We're actually here with Peter in person, so we'll be able to keep things moving smoothly. Evan, I'll turn it back to you.
Awesome. Yeah, no, I appreciate that. Like I said, I love listening to Jonah speak. Always super informational. So that was great. He had to go off, but make sure you give him a follow. I'll keep the earnings stuff brief, maybe only go for a couple of them. Try and get us back on track at 10 a.m. First stock I got for this is Roblox, which actually reports today after the market close. Wall Street is expecting EPS of 23 cents and a revenue of $689 million. Analysts are expecting revenue growth of 24% in the quarter. This is the summer period for Roblox, and there's some stocks where that might not be as important as much, but Roblox's main audience is kids, and it is summer. So this is a very important time for Roblox, I would say, especially around user numbers and everything like that. Revenue could still be coming up, but I would watch how the user numbers come in, how they do breakdown if they were playing more time. This is the summer. This is when kids love to go out and play video games and do their thing. So this is definitely a very important quarter for Roblox. So we actually have Nick up here, who I talked to him briefly. He's played some Roblox in the past, and I think that a lot of us on FinTwit, not necessarily, haven't really played the game. So just, Nick, do you got like a 20 to 30 seconds thought on Roblox through the perspective of like someone who's playing it and likes the game?
So, I mean, you can build things like in Minecraft, you have friends and neighbors. And I think for the earnings, not only this time, but going forward as the summer is starting to decline and kids heading back to school, if they can keep their players and how many they can keep. And I think that's going to be an important thing with earnings is daily active users, monthly active users, and to see where and what they can do to help the stock. And I mean, look, EPS of 23 cents is what's forecasted in revenue of 689 million. Now they have to see what can we do to get to maybe 1 billion and how they can build up the game. And so I don't really play it a lot, but I like it, and you can play with different friends and build things. But
you can kind of create servers, and that's a big way to extend the game, and we do stuff like that. But I'm just kind of wondering, have you seen any shift kind of firsthand in numbers, people playing, people on the server, anything like that? Even if it's not, exact, but just anything with that?
Yeah, I mean, I played it over the weekend. I touched on it. A couple of my friends played, and I feel like that a lot of more. I mean, there's still lots of people, but I feel like over this weekend, I'm not seeing a lot more people on the server. Is my game wasn't really lagging a lot, and so maybe as kids head back to school down in Florida, Georgia, and around the world, Roblox is starting to get a bit of ease with people on the servers, because I know over the weekend there was a couple server crashes, at least in my area. But we'll just have to see how this earnings go.
I also saying Roblox earnings today after the bell. That's the big one today. I'll move on to the next story. This one is the stock that I'll be watching the closest, but to each their own. This is Nvidia. So Nvidia reports earnings to Wednesday after the market's closed, I believe, maybe Thursday. Don't quote me. eWhispers puts out a tweet, a calendar every single week, so go and check that out. eWhispers, Earning Whispers. They'll have the exact date, but Nvidia reports this week. Wall Street is expecting EPS of $1.02. That's up 85.5% year over year, and revenue of $6.34 billion. That is up 63.8% year over year. So everyone here will know Nvidia. Nvidia is really kind of considered the top of the top in the chip semiconductor game. So, a lot of the other chip companies have reported around it, and the numbers won't be exactly the same, but you'll tend to get a good feel of where the industry is going. So kind of look for people to expect Nvidia to come in above most other semiconductor companies. And maybe not in every single number, but definitely in quality. Nvidia is considered the cream of the crop for this space. So just, with that comes very, very high expectations. So I will be looking for any commentary on, the chip shortage and how that's been going. There's been very big semiconductor shortage going on. It's mostly been affecting the auto industry, but Nvidia did have some commentary about it on the last call. They were mostly able to kind of deal around it, and it wasn't going to hamper too much. But we're 3 more months into it. We'll see if they're able to keep it where they're at and keep everything running super clean. But when an entire industry is getting hit by something, generally there's not going to be that one company that survives it the entire time. They're going to get hit. There's going to be some problems going ahead. So don't be totally surprised if there's some commentary about that. But overall, when you go to Nvidia earnings, Nvidia has to be better than the other semiconductors. That's just where it's priced. That's just how it's thought of. So just watch those numbers after the market's closed. I believe on Wednesday or Thursday, one of those days.
Wednesday after the market closed.
Wednesday? All right, perfect. Thank you, Nick. I have Walmart. I'm going to do this really, really quickly. EPS of $1.57, revenue of $136.04. U.S. business to post same-store sales increase of 4.26% during the quarter. And then for the year, that would bring their total revenue up to $554 billion. So I'm fairly certain that Walmart is the company that brings in the most revenue on the planet out of every single company. So that's just a number for my personal self that I enjoy watching, seeing how high that yearly revenue number can get to. But that's definitely something I'll be watching. And then it is 10 o'clock, so I'm going to do this last one extremely quickly. Robinhood. This is their first time reporting earnings. Everyone here knows that this is such, either you hate it or you love it type stock. So I expect a lot of volatility around this earnings. I expect a lot of people saying how much they hate Robinhood and a couple people saying how much they love it. So this should be a fun earnings. Anytime you got super entrenched sides on both sides, it just makes for great entertainment, especially from the guys or girls tweeting about what's happening. So I will be watching Robinhood. I don't own the stock. I'll be mostly watching it for tweets, but yeah. So with that done, I'm going to pass it over to Gav, and we're gonna keep it moving.
Perfect. So let me grab Peter from over here, and we'll get started with Peter and Katherine. Let's start off with Katherine. Katherine, how's your morning going?
Good morning. It's going pretty well for a Monday in the markets, though we're seeing quite a bit of red here, huh?
Oh, yeah. Especially if you are in crypto like I am, you are seeing a whole lot of red. But yeah, I guess initial takes. Peter's here too. Peter, how's it going?
Hey guys, good morning. Honored to be on this panel with everybody. Hi, Katherine. Hi, team. What's happening, guys?
We're doing great.
Well, nice to hear you, Peter.
Nice to hear you, Katherine. And Jay Woods is on, right? What a great team here. And it was great to Mr. Lupton was really a wonderful addition to this group. So we all know he's got a huge following. He's obviously got a great past history, but as do most people up here. So it's nice to be part of it.
So let's dive right into it. I guess initial thoughts, Katherine. I know you can't speak to specific tickers, neither can you, Peter. But Katherine, initial thoughts on this market overall this week, things that are sticking out to you. What are you keeping your eye on?
So for me, it's definitely going to be Afghanistan, and just kind of seeing how this can impact global markets, not just U.S. markets. U.S. market wise, as you kind of mentioned already, Gav, I'm definitely paying attention to cryptocurrency, specifically just to see, how we come back from this weekend and whether or not we can kind of see a little bit of a bounce there. Other than that, it's kind of the end of earnings. So I like watching retail earnings because I think that you kind of get a sense of what the consumer has been doing, and that gives you a read of what the consumer could be doing, especially as Delta is pushing case counts in the US higher. So those are kind of the top 3 topics I'm looking at.
Okay, awesome. How about you, Peter? What's your top 3?
Hi, everybody. I cannot talk about particular stocks, but I will say that this is a fascinating market. I spoke about it last week a little bit. What's going to take this market? Look, we closed last week out at 35.5 in the Dow, and really robust levels in the S&P 500. Obviously, the question at the end of every week is this market going to go higher, or is it going to be a little toppy at these high levels and consolidate or sell off? What is going to be the thing that dislocates rally? And I think for me, the most important thing is, obviously, as Katherine said, Afghanistan is a story to keep your eyes on. I'm not sure how much the market is going to respond to that. And for me, the most important thing, which is the news that came out this morning, is the fast tracking to the tapering story with the Federal Reserve. I think that is something that people have reacted to in the past, and I think it's a huge thing. Look, this market has been, there's been gasoline on this market for the last 18 months, whether it was the stimulus package, whether it was all the deals coming out of the Fed, and for sure the buying of the financial instruments, $120 billion on a monthly basis. So the minute suddenly we decide, look, the Federal Reserve had mentioned about 4 weeks ago that we'd have plenty of leeway time before we actually heard about tapering, and the market sort of was happy with that. That meant that they were able to position themselves in the trade, that we're going to know when the Federal Reserve takes its foot off the gas pedal, stops pouring gasoline on this fire, and we may see a little bit of consolidation. This morning, apparently, I guess there was some votes going on that they are going to fast track the tapering. The economy seems strong, and what would they be doing that because of? We're seeing solid unemployment numbers. We're seeing a solid recovery story, even though I agree with Katherine, this market could get dislocated by the variant as it spreads out. But surely we are at a strong level. Markets are robust. And, if they decide to start tapering in September, we're obviously going to see the market respond to that. And I think that's one of the biggest things that the market that could dislocate this rally. I'm not saying we're talking a crash. We may see some consolidation. As I've also said before, I think a lot of the people in this market are sitting around with a shopping list, and down 1,000 or 2,000 points in any sector, in any market right now, I think you're going to see buyers.
Fascinating. Awesome. I appreciate that. So kind of just a quick question building off that, maybe not building off it, but still. You guys were talking about, it is a Monday, the market's down, and I feel like the energy, the vibes, and everything like that is very different when the market is down compared to when it's up. So just kind of quick thoughts on, like, do you guys enjoy coming to a Monday morning down big? Like, these are, for the long-term investor, a lot of times it's where buying opportunities are, and it's just a different type of market energy and stuff like that. So kind of the question, do you guys enjoy waking up on a Monday with the market down big, just kind of getting the energy right for the week, or do you prefer that big green day? I'll start with Katherine.
So as a journalist, when the market's down like this, there's at least 3 or 4 news stories to be covering. So I like that aspect of it. Of course, when looking at the market down this way and looking at stocks being down in general, I don't want anyone losing money. I mean, that's just, I always feel a little guilty for that, but obviously not my fault. Monday mornings.
You want me to respond to that? Sure, happily. You know what? Look, I don't have an axe to grind in this market. I am, only until recently, I actually was not an owner of any stocks for myself. That's starting to change a little bit. But, yes, I actually love a Monday morning down market. Look, the bottom line is we've seen this market trading at crazy valuations. And I know as we embrace this new generation of people in the investment community and everybody's sort of really wondering, do I buy stocks up at these levels, right? Is the recovery going to be solid? What's the variant doing to us? Look, down 200 points is really a blip in the road, guys. It's literally like hitting a pebble going 90 miles an hour. Let's think this market is up, multiple digit percentages, thousands and thousands of points, on a weekly, monthly level here. We're at 35.5 in the Dow, which is crazy. 18 months ago, look, we were down thousands from here. So look, these are nothing more than buying opportunities. The market tells us that way, whether we're down 200 points, 500 points, 800 points. We saw the market down a couple of weeks ago. We opened down on a Monday, down as much as 950. We ended up closing or 759. Now we ended up closing down. We were down about 900 points. Well, that definitely got people's attention. Down 200 points on a Monday morning with so many moving parts that could dislocate this rally, Afghanistan being one of them. Um, and clearly the variant being another one, is really just a blip in the road, in my opinion. So, look, we're going to see. Look, I'm a big proponent of technical analysis. I'm not going to talk about the long trade. If you're an investor, on down days, I suggest don't look at your portfolio. But if you're a trader, it's important to note that if you'd taken profits on Friday and nobody gets poor, no one goes broke taking a profit, you'll have more buying opportunities on Monday. So down 200 points, you'll see a little bit. You'll see buyers rush in. We were down as much as 250 in the Dow. Now we're down 195. Look, I don't know how this day is going to pan out. It really will depend on where people's focus goes. Are there buyers? There are plenty of buyers in the wings. A lot of people sitting around with a shopping list and with money to put to work. So down 195 points literally is a pebble in the road.
We don't even know how this week is going to play out, quite frankly.
I agree with you.
Let's bring it back for a second to crypto, because Katherine, you had mentioned that you were looking at it down. Have you found a story yet today? What's your focus?
So the focus for me is right now I'm actually producing a script on crypto. So basically what we're looking at over on the street is just what's happened this weekend. As you guys were talking about actually earlier, we were looking at the Walmart looking to hire a digital cryptocurrency lead. It's definitely an interesting story. I don't know. To me, I'm curious because I don't know whether or not that means that they're actually seeking to get into crypto or if they just want exposure to the space. And I feel like those are two very different things. And it's the same thing the same question was brought up when Amazon put out that job posting. So it's curious whether or not these companies are actually looking to get into crypto versus exposing themselves to crypto.
Peter, any takes on that?
You know what? No, I don't. I find the space fascinating. I don't know that much about it. But if you watch it trades, it's curious. People always wonder, can you trade crypto using technical analysis? And you absolutely can. Okay, it's super important to see where there is support. The stock's been on about. Crypto has been whatever way you're trading it, whether you're trading the small Maras of the world or you're actually trading Bitcoin and the other coins as on their own. We're seeing a rally from 30,000 to 46,000, right? That's a reasonable rally. So, some of it could be profit taking. I'm never clear when these stories come out, like Katherine just described. What does that mean? What Walmart's release, whether they're actually going to get into it or they're considering it, it's going to be a pay method or what. So you don't know if this is really a bullish announcement or a bearish announcement and how that's going to play out. But basically, the way it's been up over the last little bit, it would make perfect sense for people to be taking some profits up at this level.
Yeah, just quickly with that, I think that Katherine really hit it on the nail that we don't know what they're doing in this space. The one thing I will say is the job posting that I did see for it from LinkedIn was directly for a digital currency and cryptocurrency product lead. So when you're speculating, you may not be right, or you're probably not going to be right a lot of time. To me, that sounds like they're trying to make more of a product, kind of bringing in that product lead. But I think that Katherine really hit the nail on the head here is that we have absolutely no idea what this actually means. So I said this a little bit earlier, but this is the type of thing where I think that you're so much more better off just letting what's supposed to happen and what will happen play out and then reacting after that. If you're kind of going to go and try and, oh, Walmart's getting in, I'm going to buy Bitcoin, and then 2 months later you realize they didn't actually hire anyone, they hated and they didn't do anything. So just let stuff come out, let it come out. You're not going to miss your opportunity. Stuff goes up, stuff goes down, and kind of just let what's going to happen.
You know what? I'd love to weigh in on that a little bit too, because price action. I'm really glad that that Evan has been talking about this a lot, because it's super important to me. Is when people talk about earnings, when people talk about news, when people talk about the Federal Reserve, and trying to anticipate what the market's response is going to be to all these things. We've seen companies come out with solid earnings and solid guidance and still spend the next week selling off. So a lot of these trades are so crowded that I'm a firm believer, and we do that within the technical analysis spaces. Let the news come out. Let the price action determine your response after the fact, and then plug in your technical analysis. Whether it's going to be how you're going to how you're going to trade an earnings report, how you're going to trade as a Federal Reserve tapering, how you're going to trade the market's response to the Afghanistan story, and how you're going to trade crypto. Right? We've seen it happen when Elon Musk will make a comment, or the companies will make announcements that are really very muddled in interpretation. Right? Some people may think, oh my God, this is, that's what makes the stock market, guys. We've got buyers and sellers. For everybody who's buying it, who thinks it's going higher, there's someone who's either selling it, getting out of it, or shorting it, thinking it's going lower. So that's the amazing thing. And with all these things, with the new appetite, the new millions of people trading this market, a lot of these trades are super crowded. So it's not your grandfather's stock market. You cannot trade it anticipatorially. Big word there. It's like an S&P. It's like forget it. Anyway, you can't do that anymore, in my opinion, because the volatility of this market, you can make a bet. In the old days, you used to be able to make a bet on expected earnings. They would be good and the market would just go up, and it would all make sense. Right now, you can literally get positive news and a stock will sell off, like buy the rumor, sell the news. And it happens in every sector relative to all the information that's out there, because there is so much information that we're getting on daily levels. We're getting it instantly in real time, and the market is reacting to it. And that's why you'll see when stuff comes out, stocks will go up $5, down $30 on the news. And then if you are patient and you watch the price action, you will then be able to react in a responsible fashion and trade it. Otherwise, you're really throwing darts at a wall.
Awesome, Peter. No, I'm really glad you could echo that, and glad we're on the same page with this. I agree completely. Before we move on to our next question from Nick, I just want to say again, one more time, just make sure you're following all our speakers up here. Like, these spaces are fantastic, and we love giving you information. But these people who are talking, like, they don't just talk this stuff. They tweet it out. Katherine, Peter, awesome Twitters, very knowledgeable people. You guys definitely should be following it. Jonah was up here as well. Awesome people. And then just check out our sponsor at the top. They're allowing us to do the trade of the week and kind of make, we can make a trade that we want and not have to worry about losing money. We're more doing this for the educational purposes and everything like that. So they're enabling us to do that. If you guys want to see how many times the S&P 500 hit all-time highs over the last couple of years, check that out at the top. But without further ado, I'm going to move over to Nick, who I know has a question for Peter and Katherine.
So, Peter, what do you make of the new Wall Street Journal article this morning with the Fed? We've had many Fed speakers this morning. Kaplan would prefer to phase out asset purchases over 8 months. Daly says tapering could begin this year or next year. We have so many different speakers saying this and that. And Fed minutes are released Wednesday, I believe, or Thursday. What do you make of it, of tapering? Do you think the market already priced this in?
Absolutely not. You're asking, is for me the question?
Yes.
Okay, look, I think, the whole concept of the Federal Reserve and the different governors and the different opinions is fascinating. And that's, obviously they have a figurehead there in Mr. Powell. And at the end of the day, that's where the decision comes from. But I find it fascinating how different some of their opinions are, especially about something as significant as tapering. So look, until they're all now just sort of posturing. Individuals are coming out with their opinion. And once again, it goes back to price action, guys. We're hearing, if you react to, look, we've seen the market. I think one of the biggest market move headline reports is the Federal Reserve. We see it on a weekly basis. We see it on a monthly basis when they come out with their minutes, when Jerome Powell has his news conference, when they actually decide whether they're lowering or raising interest rates. The tapering question has been one of the biggest market movers over the last number of years because it's been what has basically contributed to the market being where it is today. So I think the schedule on the tapering of the Federal Reserve's buying policy is going to be huge once it actually is etched in stone and we have it. How soon is it going to be? If it's a decision that's going to happen over a year and over 2 years, the response is going to be sort of short, fast, and furious. And then we're going to just kind of realize, okay, well, this is a long-term thing. Let me position myself. But if we get broadsided by news in September that, look, we're going to start cutting this back from 120 billion a month to 80, and it's going to start in October, and I think the market will respond, and I think it could have some effects on dislocating the rally short term. I think there are plenty of people with their shopping lists, wherever the market's going to go. I'm not sure if there was a sell-off where those buyers lie, but they're surely around. We do see a bid in the market. The market tells me that. It's not my opinion. But we've seen it over the last 6 months. We've seen it over the last year and a half, that every sell-off, whether it's been about trade problems with China, whether it's been about inflation, whether it's been about the yield curve, whether it's been about the taper, we've seen short-lived sell sides, whether it lasts a day or two, a week or two. We've never seen anything more than 3,000 point sell-off over a week's time over the last year, I believe. I mean, I'm just throwing that out there. And then the buyers sort of come on in and we go back to record highs. So it's fascinating the way they disseminate their info. I think the taper story is one of the biggest stories that really they'll have the market respond, because I'm not sure whether the market's shown us that the COVID story and the variant story, even though we all obviously care about it, is not something that's going to dislocate the market. I'm baffled by it because I would think that it's going to affect the recovery. It's going to affect earnings to come. And I would think it would affect the market. The market's proved me wrong.
Fair take, definitely a fair take. I'm interested to see where this tapering goes as well and how the Fed continues to play this. Katherine, I want to bring it back to you real quick. When we did our podcast a few weeks ago, we talked about momentum stocks. And there's different names shown in the market, but looking at things like GME, AMC, where there's still plenty of people that are talking about them. Both of them are pretty much even today. They were down a bit, but they pretty much come back. Have you been continuing to talk to retail investors and keep an eye on these and others? And just what's your general thought pattern there?
So I don't really tell anyone to, I think I heard that right. I don't really tell anyone to watch any stocks, but to me, yes, I'm still watching GME, AMC, Clover. I think that they may not be covered as much by the mainstream media, but that doesn't mean that they've lost the interest when it comes to the Reddit crowd and the retail investor. I think that they're just kind of, it's been overcovered in a way in the media. So it's still something that they're on my watch list. They're like one of the, I would say, top 20 stocks that I check every morning. I am seeing that GME is down just slightly this morning, but still up like over 3,000% in the past year. So definitely still interesting. I just think that there's not really another story angle that the mainstream media can really hit on,
Yeah, absolutely. They've kind of covered so many different angles. I'm bringing it back to Peter. What's up, Peter?
You know what? I want to bring this up just because Katherine and I did a piece a couple of weeks ago. We got on a call together and we realized that we feel, she as a journalist and me, somebody down here who sort of analyzes markets, how important it is that people really put the meme generation, the meme stocks in perspective. And that, it's not that old school Wall Street is really upset about some of these things happening. Anything that brought people's eyes to the marketplace is a good thing. Obviously, there's a lot of questions about the motives of the herd and the attack on stocks and the short seller story. That's a battle I'm not really willing to choose. But what we really want people to know is that these names they're just stocks, right? That are actually being their momentum is being fueled not by fundamentals. Their momentum is being fueled by headlines and the new herd approach to trading, right? People really going online and looking where the herd is going to attack today. And so what Katherine and I spoke about on our call was that it's super important for all of you guys who are trading these names. I think they're incredible trading vehicles. They're not trading up on fundamentals. We know that GameStop and AMC were actually companies that were near bankruptcy before this whole phenomenon happened. And so they've traded from $2 to 483 and back down, referring to GameStop. And obviously AMC's had a wild ride itself. So they've become great trading vehicles. I agree with her. They've been overplayed in the press. But at the end of the day, from a trader's point of view and a technical analysis point of view, these are dangerous stocks. I know that there are a lot of people who come to us in our Wall Street Global Trading Academy venue and say, you know what, I got involved in these things. I bought AMC at 59 and 62 and whatnot because everyone told me it's going to 100 or going to the moon. And I've spent the last three weeks trying to get back to even. And as I discussed with Katherine, and her motive and mine are aligned in that we think education is the best thing for this incredible new generation of people coming in to trade this market. Is we don't want you guys to come to this market, get wrapped up in trading advice that using hope as a strategy or using the internet as a financial advisor, when these vehicles are awesome, volatile vehicles that if you use technical analysis and if you use this opportunity in time where we are right now as a time to educate yourself about markets, about technical analysis, about volatility, about these names, that you can actually make money in these wild rides, right? Just as trading vehicles for the marketplace. It is sort of a very fuzzy load to try and figure out valuations because a lot of them, they're trading in no man's land value-wise, but yet they are wonderful trading vehicles. So I beg everyone to, if you're going to check out the meme stocks, and they are fun and exciting, whether you add technical analysis as a tool in your box before you get involved, because I would hate to see you trade them, buy them at their highs, sell them at their lows, and get really upset, blame the suits, and leave the party all pissed off that we kind of stuck it to you. And that's really not the case. That you can't use the herd mentality as a trading advisor, and that these are great stocks to trade. And if you use technical analysis, you will find the great entry points to get into them, get out of them, take a profit, and live to see another day.
Wise words as always, Peter. Bob, when you chime in. Okay, I'm just going to take 1 second, just a quick moment of recognition, because we like to recognize, obviously, not just the speakers, but absolutely the listeners. See several of our favorites that come here every single week have been repeats on this space. Really makes it worth it to us. There were over 370 people on here at one point, over 200 at this point. So a huge thank you to all of you for taking time out of your day, joining us. We're really just trying to create a new medium of not just education but collaboration between us and our audience. They're always giving feedback to us and always giving us stock plays, ideas, questions. So huge thank you to that, and then big thank you to my mother, who's as well in the crowd listening. Definitely my huge motivator. So shout out to my mom, who's in the crowd listening. I'll give her that. All right, I'm bringing it back to you, Katherine. I know we can't talk about specific stocks, but I want to talk for a second just about research. You're a journalist, one of the best out there. For people that are, in the crowd and they're wondering, where can I go and find out more about these stocks? Where can I go and do my research and find some stories? I just wanted to know if you could maybe share a little bit about your process so we can, all learn from that on how to find some of the best information.
So my process kind of depends on the day and what stocks we're looking at. But in general, when it comes to something that's caught my eye, obviously I'm looking at where the stock has moved, what kind of pressures or catalysts are there to either lift it or send it further down. For example, while we're on this, I missed the Sonos news completely. So I was wondering, it was one of the top trending tickers. And so I clicked on it, and then I was wondering why we'd see a 10% move in Sonos. So, obviously using Google, but also reading through various articles and just kind of understanding why that would be a catalyst for the stock. When it comes to research notes, I get a lot of them emailed to me because I know I get a lot of questions about where I get my research notes. So I do get a lot of them emailed to me, but if you tend to look up, I know CNBC does this, you can kind of find which major firms have put out good research notes on stocks that could have a positive or negative impact. Like, for example, Nvidia. Sometimes, we see that stock react a lot to research notes. Otherwise, I use FactSet a lot to kind of see where the overall market is going and kind of see what major stories could be putting pressure on the market. That's probably the first thing I log into in the morning. And then when it comes to momentum stocks, because I do a lot of research on Reddit and Discord, I'm in a lot of, I check Reddit frequently. I'm on Discord pretty much 24/7. And then to check those names, I go to swaggystocks.com. And I kind of see where the momentum is there, the stock price versus the mentions, which you can track there, the positive sentiment versus negative sentiment. So I think that's, I don't know, Gav, what else do you want to know?
I thought that was pretty good. Shout out Swaggy Stocks there. Shout out to people sending you emails ahead of time. Love to see it. I wake up Monday morning and Evan, Stock Market News, sends me an email with all the breaking news from the weekend. So he's kind of, my journalist. Love to see it. I think that I kind of answered my question. We want to get Jay Woods up here too. Peter, you want to call out Jay real quick?
I just want to know if he has a minute and he wants to come on as a speaker. Jay, come on, buddy.
Come on, Jay.
Jay,
we're trying to. Yeah, so we'd love to get Jay up here. I sent him, I think, a couple of invites. If it's not working, just let me know, Jay, but it'd be great to have you up here. But let's continue. I guess, a little bit more. Evan, I'll turn it back to you. Got any questions?
I mean, I don't really have anything top of mind at this moment. I think that the one thing that you said there, was with swaggy stocks, and I watch that as well all the time. And I've seen an interesting shift in the stocks being talked about on swaggy stocks. There was that period when Wall Street bets really took off, and it was GameStop, AMC, 1, 2 every single time. And it's kind of shifted a little bit. Like generally, the number one stock on swaggy stocks is a big news stock that's around right now, and then the rest 5, 10 of them are a little bit of different names than you would expect. Apple's in there all the time. Amazon's in there every time. The S&P 500 is in there every time. So just have you seen a shift in the type of stocks that are being talked about on swaggy stocks recently, Katherine?
For sure. And I think that goes back to the stocks being talked about on Wall Street bets. And there's been, we can go to Wall Street bets. And then there's a couple of other subreddits that I check.
Oh, that's very fascinating. Very fascinating. I appreciate it.
I was working on the floor of the NYSE. That was one of the conversations that we'd have pretty much every single time that we talked. So being able to actually reach the retail investor nowadays is kind of what makes my job worth it. And it makes what I do feel important, because it's not just about what's going on Wall Street. What are the so-called suits doing? What's Wall Street watching? It's also what the retail investor is watching. What's important to them? What stocks are they investing in? So while it's been wild, it's also been incredibly exciting and has kind of secured my passion for my career.
Real quick, Peter, I think there's someone in the audience that you wanted to have come up.
So look at an amazing group we've got on here. So Guy Adami just popped in. He's Fast Money, one of my mentors. He may not even know that. But I'm wondering, Guy, you want to come on and speak for a minute and just talk about what you're looking at today? I don't know if we invited him in there. Guy Adami, guys, is on Fast Money. He's been in the biz forever, and he's an inspiration to anybody who's interested in trading this market. So I'm not sure how we get him on here, but it's welcome. Anyway, relative to what Katherine talked about, guys, that's one of the most fulfilling parts of what I do, and I know that Katherine's mission is the same, is that we suddenly have these Guy Adami on the speaker. We have these 40 million new people in this marketplace, and I know they're all watching Fast Money. Guy, go.
No, I appreciate that. That's extraordinarily kind. It's more than generous. I also say, as you know, it's probably not entirely true. I'm just another guy trying to make a living, but I appreciate you guys asking me on. I was just listening to the conversation, fascinated by some of the things you guys and gals were saying.
Thanks for coming up. It's always good. Guys, everyone should, I'm also a firm believer in availing ourselves of as much information as possible. Guy is one of the great parts of Fast Money. You see him every night with Melissa Lee and whoever is monitoring them of the day, but it's a great group. The Nigerians are there, and Grasso and everybody. He's a fast long term, but Guy's he's been in the business a long time. He's traded the market from different positions from where he's been along the way. But look, one of my great mentors.
That's kind of you. And, you asked what I was watching. I find it fascinating, and I've talked about this on the show, on our podcast. 10-year yields in this country. It should be the most liquid instrument on the history, and on the landscape right now. And it's anything but. I mean, you look at how volatile yields are. We go from 145 down to 114, back to 135. We made a move from, I want to say, 119 to 131 in about 15 minutes on that jobs report. I think it was a couple Fridays ago. Bonds shouldn't move that way. And, people will say it's different this time. It's never different. I would submit, again, just an opinion, that bond volatility sort of is the precursor to equity volatility. And we saw that, quite frankly, we saw it in the fall of 2019. And I think we're on the precipice of seeing it again. So I just don't think yields should be moving at the speed and alacrity and the volatility that they're moving with now. It just doesn't make a lot of sense to me. So if you're asking me what one thing am I watching, right now it's 10-year yields.
Awesome. No, very fascinating, Guy. And I got to echo what Peter was saying is I am a big fan of you. I'm a big fan of the Fast Money show. I do watch it a lot. You, Tim, Melissa, all the people who are on there all the time. So just kind of my thoughts around it. That show's it's on at 5 p.m. So just kind of like, how do you prepare? Is there anything you do each time preparing for that? Or is there kind of a way that you get ready for that show?
Paying attention. As I like to say, it's the cheapest thing you can do. So, I mean, the preparation is just sort of immersing yourself in the market and the things that are going on. If you want to get inside baseball, we have a call each day at 12:30 where whoever's on the show that evening, we sort of talk about what we're seeing and what we think should be on the show. So we sort of build an outline for the show. But as most of you probably know, our show is live and it's unscripted. So the preparation is, again, paying attention, doing a lot of reading, but a lot of it comes down to just harnessing some of the resources and some of the knowledge in my world, I've sort of gained over the last 35 years of doing this.
Fascinating. And then I just want to quickly do this. Guy, you were talking about your podcast there for a second. Where can we find that to talk, hear more from you?
No, I appreciate that. I didn't come on to sort of prop up our podcast, but we actually have done rather well. It's myself, a guy named Dan Nathan, who most of you should know if you watch the show, and a gentleman named Danny Moses, who was featured prominently in 2 of Michael Lewis's books. Danny's a really interesting guy, and the name of the podcast is called On the Tape. And believe it or not, I find this sort of hard to believe, and you can do a lot of things with numbers, but we've made our way into the top 1% of podcasts in terms of downloads since we started, I want to say, in February. So we had a podcast they typically drop on Friday. This past week, we had Brian Kelly on. We had a pretty cool conversation about crypto. We're going to have Mike Novogratz on this week. I'm sure most of your listeners know who Novo is. So it's been a lot of fun. I appreciate you asking that.
Listen, a part of you coming on here, you're giving us some great information and we're really happy with it. And, we want to send people to the stuff that you're doing because they're here to hear our speakers speak and, they want to keep going with you. So I actually do see it in the spaces, the on the tape podcast. It's one of the verified accounts. So it should be near the top of your screen. Click through, follow that. You hear some great stuff from Guy, but I'm going to pass it back to Gav, who has a question.
Pleasure having you on, Guy. Thanks for coming up. Always great to have amazing speakers in our spaces. My question for you is, earlier today we had on Jonah Lupton, who was talking about small cap growth stocks. And especially coming out of earnings last week, we saw a nice week of earnings. We saw some big pumps, whether that was on Upstart or a couple of others. Just wanted to hear your overall thoughts on the small cap, growth stock, maybe slightly leaning towards the tech area. I know perhaps, I'm not sure if you can speak to specific names, but just overall thoughts on that area.
Yeah, it's interesting you mentioned small caps. So obviously the ETF is the IWM. There are a few, ETFs out there. The Russell small cap IWM is one that we look at. And what's interesting about it is if you look, it's sort of been trading sideways now for many months. And my view is the small cap stocks, which are obviously the most economically sensitive names, are trying to figure out where they want rates, right? So do they want 10-year yields to be rising, which would be suggestive of economic growth, or do they want them to sort of stabilize here, or do they want them lower? I'm not really sure. But if you notice, the small cap sort of topped out right around the point when 10-year yields sort of topped out, I guess, in March. It's interesting, and I think they're struggling for clarity, and I don't think anybody really has it right now. So obviously this Delta variant has some people scared. They think maybe this reopening trade's not going to be as robust. I think a lot of people also will say maybe the market's looking past that. The S&P 500 obviously continues to grind higher. But I think you could take a lot away from how the Russell trades or how small caps trade. And I think they're trying to figure out, they're trying to get onto some terra firma here in terms of where rates are and what that story is telling. And I wish I had the answer. I don't, but that's how I look at it.
Definitely a fair take. And yeah, they absolutely were moving with those 10 years. But yeah, just continuing to hang on personally, trying to find entry points. Unfortunately, getting burned on a couple of the Chinese ones with volatility, but that's life. Peter, we brought Guy up. Did you have any other questions that you wanted to throw, or Katherine?
You know what? No, I just wanted to address what Guy was talking about the yields, because it's totally out of my wheelhouse, and I'm not an economist, and I really have trouble wrapping my head around it. But obviously, historically, we've seen that the movement in the yield, which has been much more dampened than it has been lately, was a real indicator on economic growth, and it affected the market movement in a big way. We saw that back in 2020 or 2019 when we ended up the inverted yield curve or the death cross, and it became the focus. They were talking about it one day on CNBC, and it sort of threw the market into a bit of a frenzy. Is that wild, volatile movement in the yield curve that you described, that trade, a function of all this sort of uncertainty in people's feeling about the recovery story, which is not sort of flowing over into the market, right? We've seen, the bottom line is this market is up double digits since March 2020, and we know it's a function of stimulus and appetite and whatnot. But there is still there's still a bit of stumble ground for the economy between now and a reopening story. So could that trade be where that anxiety is finding itself? You know what I'm saying?
Yeah, I do know what you're saying. Look, these are just my opinions. I'm not suggesting I'm right. But what I will say is the chasm between the stock market and the real economy seems to get wider each and every day. And that's by definition unhealthy. And there are a lot of people, and I'm not suggesting anybody here listening thinks this, but there are a lot of people who do believe that somehow the stock market is some indication of how the economy is doing it. And I would submit the two have never been farther apart. And that's going to prove to be problematic. So either, one of two things is going to happen, right? Either the economy is going to catch up to the stock market or vice versa. And I have a view on what I think that's what's going to happen, but it doesn't really matter what my view is. So as that chasm continues to get wider, it just leads to, a lot of the things that we're seeing right now. The market's trying to come to grips with a lot of these things. I think for most people, their hope is somehow magically the economy is going to catch up. I'm hard pressed to believe that's going to take place.
You know what? I agree with you, and I often talk about that. Is we've seen that incredible bifurcation, one of my favorite new words, that happened in March 2020. Right? Sometimes markets and economies trade in concert. Sometimes they go opposite directions. As you described, it's never been more of a chasm between the reality of where we are globally, economically, and where the market is, right? Some people think that's why this is a bubble, that it's just being propped up by the Fed and whatnot. I think it's more just that there's a lot of money on the sidelines and there's a lot of people with money in the market supporting it. My hope is, as you just described, is that the economy will catch the backwind of the market and it will forge higher. I'm not sure either. And obviously now with the new variant and the other obstacles that we're seeing globally, and what's going to happen. The reopening story is still a deep unknown, a day at a time here.
Real quick, Nick, do you have a question?
Yeah, I was gonna say, Guy, what are your thoughts for the overall market? The S&P continues to grind higher, as you said, but I just read an article this morning on Barron's, and an analyst over at Jefferies and many analysts say, as COVID cases spread, vaccines won't be enough. Do you think that we continue, or as Tom Lee said it, an everything rally, or how do you look at this market as we continue? He said last week we see an everything rally. Do you think we see an everything rally, or where do you see the most spots as the greatest for this market?
Yeah, I mean, Tom Lee's been spot on if you've listened to him. He's had a couple missteps here and there, but on the aggregate, I mean, he's been spot on basically since March of 2020 or so. So if you listen to his work, it's been very thoughtful. It's interesting that I think Goldman Sachs, I want to say a week and a half or so ago, put I want to say a $4,700 target on the S&P. Their reasoning was interest rates were going lower, and to the earlier point you guys were making, it's sort of this cash on the sidelines thing. And I think on the same day, Citibank came out with sort of a negative piece on the S&P 500, and their explanation was they thought yields were going to 2%. So my point is, on the same day, you have two major banks with completely opposing views. So why my view should matter, really, I wonder that myself. What I'll say is, so much of this market move has been predicated on a couple things, not least of which, and again, my words, not anybody else's, a reckless Federal Reserve. It also has a lot of it has to do with this burgeoning and this growing passive money investing, where money just flows into the market regardless of stories, regardless of news, regardless of any headwinds out there. So you got to ask yourself, at what point does that end? My big fear is, well, I mean, obviously, I think if you listen to me, my views on the Fed, so I won't go down that road. But my fear is when passive investing becomes active, I'm here to tell you, it won't be active on the way up. It'll be anything but. So that's going to pose a problem. But we haven't seen it yet. Right now, everybody, the common refrain is you have to be in the market. Because there's no other places to be. It drives me crazy, and it makes me a tad scared because I think there's this blind faith that the Fed has our back. But right now, it's hard to bet against it, and I just don't know what the catalyst is going to be that's going to take it down. But that historically has been the case, right? Nobody sees it coming. I like to think I see things coming, but it's never the bus you see coming that gets you, right?
Very true. And if I can really do a quick follow-up with that, was higher, tech stocks fell. Where we see that momentum for tech stocks to gain track, to continue to go higher, if bonds will go higher, as Jay Powell says, 2% by the end of the year or further, and as many Federal Reserve people have said.
Yeah, Jerome Powell's, and I didn't hear those comments that he made, but what I'll tell you, and just again, my opinion is that these high growth names, high valuation names, I think they've learned, they've sort of acclimatized. So to the extent that any people climb out there, you realize at a certain point when you're climbing, you have to stop for a while to sort of get yourself. It's anywhere between 135 and 165. So unless 10-year yields go, precipitously or significantly higher than 175, I think these stocks will be fine. It really comes down to the speed with which, if we get to 2%. So again, I happen to think we're going to be at 2% at the end of the year. I think it's going to be a fast move. I don't think these high valuation tech names are going to like it, but that's just my opinion.
Thank you for that, guy. Okay, I brought up MBIT real quick. I think you had a statement, and then we're going to move into some closing stuff. So stick around, everybody. But MBIT?
Yeah, I just want to say I'm all for financial literacy, especially in the younger department, and that's what my entire podcast is about. But I think it's important to note that in the long term, it's you don't actually know what's going to happen. And yes, the markets have been going up for decades and have stayed up that way. But something like Japan's market could happen where it hits an all-time high and doesn't recover. So I think it's important to have that disclaimer out there, especially when teaching others about financial literacy.
Yeah, I think that kind of hits on for the long term. Yeah, there's no guarantee that the market's going to go up. We just kind of look at history and say what's happened going forward. I would say you definitely have to temper your enthusiasms a lot of the time. But I don't know who said this earlier. This is kind of the market of you need to be fully invested and just kind of picking your spots in there. So you definitely have to weigh your enthusiasm against. There's a definite possibility we could stagnate, we can not move higher. But I think that the risks of not being in the market are greater than being in the market and possibly stagnating for a couple of years.
100%. I completely agree with you on that.
Okay, all right. We're going to move into a little bit of just some closing remarks. I'm going to go to stock market news first.
Awesome. No, we really love doing this thing, kind of getting everybody ready for the week. We start this off going into deep dive in earnings, news stories, speakers, and everything. And, I'm just really appreciative of everyone who we can get to come up here and join us. So before we even move forward with what I got to say, just make sure you follow all the speakers who came up here. I know Jonah Lupton had to go. You guys all already follow him, let's be real. But we got Katherine, we got Peter and Guy who was able to come up and join us, and Nick as well. I really appreciate all you guys coming up here. Everything that they said on this call was super informative and super awesome. This was unprepared on whatever. Like when they're, preparing what they're going to write and doing everything like that, their tweets, everything like that are super amazing. Just make sure you guys check out everything that they do. If you liked what they said here today, you're going to love what they put out on the podcast, on whatever. So just make sure you guys check them out when they go and talk. And check out our sponsor at the top, Bullish Rippers, if you want to see how many times the S&P 500 closed at all-time highs over the last couple of years. But I'll pass it back to Gav.
Thank you, sir. Yeah, I'm really excited. I just want to reiterate, Bullish Rippers is giving us sponsorship money to place trades with. It's a very unique type of sponsorship. We're going to put out a poll with 4 different option trades, and then we are going to just YOLO into the one that is picked by the audience. So, well, not YOLO because there's some due diligence being done, but that's kind of the idea.
And with that on the back end, we're going to try and use this as a space on Friday where we're going to do the YOLO, and we'll come back to it on Friday and give you the learning lesson and something out of it so you could – we're kind of fitting in with what's happening with the market right now. And yeah, but I'll pass back to Gav.
Cool. Awesome. I'm going to Peter.
Guys, thanks for this call. I wanted to just say to Guy, to Katherine, Steve Guilfoyle is on this call too, that you guys, the guys who are running this FinTwit are in their 20s, right? How incredibly exciting is it that they know as much as they know, that they've taken the impetus to put this together, that we, people like me, even more, Guy and Katherine and Stephen, you guys are mentors to them. And so how cool is that we're able to inspire this incredible generation of young people? A lot of the young people on this call are people in their 20s who know so much. I didn't know anything about the market. I worked here when I was 27, but I didn't have even an edge on what was going on. These guys are learning the market. They're students of the market. They're actually getting involved, right? They're participating in it, and they're trying to inspire other people, and they're actually trading it. Wolf Financial, I mean, this is a company built by young people in this space. So, we are here to mentor you guys as the new next generation who will be involved in the market. So to see all that you guys know so young and so early, and that you've just taken this step to do these calls, these Twitter things, for me, it's the most exciting thing. That's why I do what I do. I'm sure Guy is a big proponent of the fact that if you can inspire the next generation to get involved in the market, as is Katherine and Stephen, that's one of our motives. So I'm thrilled to be part of this.
Well, big thank you to Peter there for the shout out to Wolf Financial. Thank you, sir. For those unfamiliar, I'm running both the Wolf Financial and this account. I just have two phones sitting next to each other, and it is a company built by some young entrepreneurial finance people for everybody. And we actually have a brand new update out today. So if you click into the Wolf profile, you'll see the download link for our app, and you can download our new thing today, which just makes basically FinTwit much easier. Anyways, keeping it moving, I want to go to you, Guy, after those really nice words from Peter, and hopefully we'll have the opportunity to have you on again soon.
I appreciate it. I enjoyed this conversation, and I love the fact that young people, both male and female, are getting involved in this. I think it's great. It's very empowering, and I really appreciate the kind words. I got to jump. I got to get ready for an 11 o'clock, but I really appreciate you guys and gals having me on.
Thanks, Guy.
Pleasure's all ours. Katherine?
Well, hello. Sorry. Got tied up with trying to look at this T-Mobile story. Honestly, I echo exactly what Peter said. I think that it's been the one good thing to come out of the pandemic after all of this and all of the hardship that we've all gone through in the past year is the fact that we really see the retail investor coming in. And I personally, everyone should feel free to reach out to me. I'm trying to be as open out there as possible. I write a weekly column over on realmoney.com about the retail investor and what's caught their eye. So I want to be, the eyes and ears for you guys. And I really appreciate you guys having me on, Gab. I mean, I love speaking with you. We've done a podcast together. We've done a couple of Twitter spaces. It's always a fun time. And I always feel like I learn stuff, and I hope the audience does too.
I know that they do. We always get the wonderful comments. And yes, it's always a pleasure speaking with you, Katherine. And thank you for everything you do. Make sure you are following Katherine. All right, we're just going to do a couple last words, and then we're going to wrap up. Nick, thank you so much for being in aid to us today.
No problem. Always willing to help out. Love Katherine, Guy, Peter. Love everybody's thoughts. But it's going to be kind of a good market this week. I think we're going to have to see what Nvidia says, what the Fed says. So it's going to be kind of a strange market this week.
Strange market is the market. Come on, man. It's always strange. All right. Gavin, I know you've been chilling with us. Anything you wanted to say?
Stay patient by the depths.
Yep. Have you ever tried buying low and selling high? Feels great, man.
No, I buy high, sell low.
That's another strategy. Okay. Before I wrap things up, Evan, anything else you want to say? All right.
We're in person, so I gave him a little shake of the head no, but I'm good.
Yeah. Okay, everybody, thank you so much for joining us today. I'm really excited. I'm going to try to maybe head back down to the floor, maybe find Jim Cramer, get a picture. Who knows? We'll see what happens. If Sorkin's here, I'd love to see him too. That is all for this space today. We will be back with a series of spaces this week. I'm working with both my co-host Evan, Stock Market News, as well as my other co-host Chad, to be putting on stuff basically every single day. Keep an eye out for Wednesday at 11 a.m. Huge space. It's going to be with Jonah Lupton. We're going to have company accounts from TrendSpider, The Motley Fool, Unhedged, and I think a couple of others might join us for that. We're going to be talking about those companies. We're going to be talking about FinTwit conference. We're going to be talking about growth stocks, the market. So those are all going to be happening. I will be either hosting from this account or the Wolf Financial account. Again, just appreciate you all being here with us. We love the fans. We love what we do. This is basically our jobs and our lives. So just putting together content for y'all. We're going to try to add visual components with live streams into this, but more to come on that. Take care, everybody. Have a fantastic Monday. Make some money. All right, y'all. That's it for today.